Going on, guys? Welcome back to the channel. Special video here today. So we've actually got a uh, channel subscriber suggestion. So we got Trey's Mustache 3915. He's looking for some information on stock ticker NGL. So that's what we're going to talk about today. So NGL is the NGL Energy Partners LP company. So it is a $360 million market cap company that moves, stores, blends, and sells crude oil, natural gas, and refined products. They also have a water solutions side of the business, which they benefited from owning and operating, which is one of the largest integrated network of large diameter produced water pipelines and disposal wells in the Delaware Basin. They've gotten really good growth over that over the course of a few years. And currently the stock is trading at 5.4 times next year's EBITDA multiple, which is about where the stock was before it shot up well over 100% by their report earnings of Q3 2023. So I'm going to pull up the stock here. Let's pull up 6-month chart. So Q3 of last year, right around this May timeframe, you can see that it's gone from about $2.81, and now we're at it's topped around $4.15, give or take. Currently trading at $3.99. I did want to go through the latest earnings report just to kind of give you guys an update on that. I'll pull that up. So this report was from May 31st of this year, so about a month ago, and just highlighted a couple of the parts of this report that I find useful, and so you guys don't have to read the entire thing. It is out there, you guys can find it. It's all public record, but it's 26 pages. I just want to highlight a few things here. So fiscal year 2023, it was a good year for NGL across basically all partnerships throughout their company. So they had good reduction in their absolute debt and leverage, which was below their initial goal of 4.75 times. They received record adjusted EBITDA of $632.7 million for the year and $173.3 million for the fourth quarter. So now this adjusted EBITDA was driven by the strong growth in the water side business. So that's that big pipeline down the Delaware Basin. And so that's good. They're seeing basically growth and reduction in both sectors right now. They also did complete sale of some marine assets and other miscellaneous items that were, came to about $141 million. And their trailing 12-month adjusted EBITDA associated with the assets was approximately 10.7 million, which implies over 13 times multiple on the asset of their sales. So this is good, guys. So basically what they did, they had a bunch of extra equipment that they were basically selling to reduce their overall debt. That's essentially what that's getting at. So they're taking equipment, stuff that they're not using, or they can repurpose, and they're selling it, and it's allowing them to reduce their debt. So they started fiscal year 23 with $476 million balance on the 23 unsecured notes and 42 million remaining on equipment notes supported by these marine assets. So they actually exceeded their own expectations, and they were able to redeem all of these 2023 unsecured notes and pay off the equipment note, totaling about 518 million by the end of the year. So that's what they are projecting. With this debt retired, our leverage at the end of the fiscal year was approximately 4.56 times. Their ABL balance at the end of the fiscal year was 138 million, and that's roughly the same level as what it was at the beginning of the year, which is great. Let's see here, what else we got. Okay, so then on their water solution side, so again, this side of the business saw some records this year. We can kind of go through here, but their EBITDA was driven by the water solutions adjusted record EBITDA of 3.1 million and fourth quarter adjusted EBITDA of $131.6 million. So their EBITDA got record adjustments for that. And they also are receiving record disposal volumes in the fourth quarter. So the biggest driver of this was that the Delaware Basin saw significant drilling and completion activity last year. And so they saw volume growth about 29% year over year, which is good. And if we continue, so in the fourth quarter, water processed approximately 2.46 million barrels of water per day. And again, that's kind of where that 20% increase was coming from. So it's 20%, 28% increase over the prior year's fourth quarter, basically showing 28% growth. And the other part of this is they kind of go into this and talk about inflation, and that a lot of these contracts with the water side of things are longer contracts. About 10 years is what they average out to be based on what I'd read. So they are, basically kind of ensuring shareholders that they won't be materially impacted by inflation in the upcoming year, basically due to these negotiated long-term utility contracts that have fixed rates, royalty contracts, without any escalation clauses or fixed expense per barrel with our chemical provider. So that's important, guys. Basically, they're going in with these contracts, they're locking in their pricing, and they're not allowing their customers to come back and say, hey, we've got our rates increased here, we got material pricing here, and they try to basically pass those costs back on to NGL, and they don't have that risk. So longer contracts, which kind of helps them better forecast too. So kind of makes me, a little more, it makes the reports a little more believable, that they can kind of forecast this in a longer term opposed to short term, even like a year or two. So, and then we go into their crude logistics side. Their adjusted EBITDA was 2.97 million in the fourth quarter, opposed to 54.5 million, which was the prior fourth year. And then on their liquids logistics side, their adjusted EBITDA was 28.5 million in the fourth quarter versus 24.5 million in the prior fourth quarter. So again, they're all going in the right direction or getting close to it. And then overall, they have positive guidance coming into 2024. Coming into this fiscal year, they've identified at least $50 million in assets, in which they've already harvested 15 million of those in the first 2 months of this fiscal year, with 530 million of debt reduction in fiscal year 2023, and more to come in 2024. Their interest expense is expected to decrease by approximately 50 million, which will allow for another source of free cash flow. And then they're very confident that they'll be able to redeem all the 2025 unsecured notes by the end of this year, which is pretty huge. And then their priority right now is basically looking to reduce debt and reducing their leverage. So they expect to be under this 4.0 times total leverage by the end or March of 2024. And this again here is kind of where they discuss the contract life, about 10 years or so. So that's kind of this report in a nutshell. Again, they kind of go into more detail, so feel free to read that if you guys want to further indulge in that. If we look at the 5-day chart, just looking here, a more technical aspect of this. So it does appear to be, over this 200 leg or, average moving average, excuse me. Got the 13 and we got the 48. So it's been on an uptrend since basically that last quarter report, which is good. Their earnings report that came out as of May seemed good, so I see this as positive direction. If you look at intrinsic value of this, I would favor this between the $4 and $5 mark. So it's sitting at $3.99. Is a good fair value, I'd say, to purchase this. What this is actually going to go to here in the near term, I would say $10 might be our price point right now to be kind of looking at. But I guess just full transparency, the real whole energy sector right now is very volatile, and as a whole really has not been performing well this year. It is starting to bounce back, and it's good that with some of these companies, this one in particular, NGL, they seem to have positive outlook, positive growth, and they have been, well, basically they have been growing in the right direction here now, which is good, all positive stuff. You go to ratings, see what Wall Street has to say. So they've got a hold rating right now. Their average price target is about $3.50. So you're looking at potentially a 12% downside if you were to buy into this, say today. However, again, kind of like I mentioned, the whole energy sector has not been performing well. So a lot of these analysts aren't going to necessarily go out on a limb and put a lot of these stocks, in a very positive direction until they really see some more movement, would be my guess. Obviously, I don't know that for sure, but that would be my inkling on that, just because, they're getting paid for this. So they can't take that strong a position and be wrong all the time. And then, they're going to get fired. So we take a little more risk, right? So if we look at some of their peers, in the group, just to see kind of how they've been performing in comparison. NGL has actually been over a year to date here has actually been higher than some of their peers. The other one that kind of came up a lot this year was ASC, Admiral Shipping Corporation. I actually have shares in this. They did very well this year. Again, they started off lower than what they normally are at. But again, a lot of these stocks are rebounding. Another stock, just for comparison, CVE. This one's a little more popular, I would say, with some people. But again, year over date, they're down almost 11%. Over the course of a year, 18%. And if you look at some of these charts, they've got a lot of highs, and then just over the past few years, especially with COVID hitting, a lot of these stocks tank. So they're trying to do a little bit of a rebound here. And depending on how they can get through some of the struggles they had, will be determinant on that. Another option for you guys, if you're not looking to get into a single company for energy, like I had mentioned, the whole energy market itself right now is kind of rebounding. So it's at a good point to buy some of these shares because a lot of them are on discount, and they have a lot of room for growth. So, Vanguard Energy Index might be one you guys want to look at. Let's just see what they got here for Overmax here. Yeah. So, this has been for the most part performing. This year it's taken a dip though. Was at 130 of max. We're at, $110, $108, $109. So there's some potential there as well. It gives you a little bit more exposure to different, not just one stock. So if you guys want to invest in that, it's another option. The other thing I wanted to look at was just digging in the financials. I know we did kind of discuss some of it already, but to me, it's easier to look at it on a chart. It just, to me, it makes it a lot easier. So we can see here from 2015 up until, March of 2023, they have been increasing net income. If we go to their free cash flow, which to me is more important in this case. So if we go to leverage, free cash flow, again, very negative in the 15s. They were able to kind of rebound. Then, they took some hits. Again, this is during the kind of COVID era. And, now they're starting to rebound kind of back to where they were. So that's good. It's improvement. Again, they were trying to limit and reduce their debt. So we can go look at that as well. Let's see. So assets have been increasing. Liabilities, I guess comparative to they're fairly similar. Long-term liabilities have actually been increasing a little bit. If we go down to their debt here. Yeah, so they got 2.9. So they did significantly reduce their debt from the previous years, which is good. Kind of like what they were, stating they were doing. Yeah, guys. So I don't know. Overall, I think there's definitely a lot of positivity in this company. If there's something you guys are looking to do as far as expanding into, some of these energy sectors right now, it's a good time to buy just because, like I said, a lot of the stuff is on discount, fair value. I think this is at $5, so even getting it at $4, pretty good deal in my opinion. And it sounds like it's got room to grow, and it's starting to get back down into its earnings that they were back when it had this pretty good rise here. I guess let's look at dividends and see if it has paid or is paying dividends. So it looks like it has in the past. Doesn't look like it's currently providing any dividends. Looks like 2020 was the last dividend payout. So if you guys are looking for dividends, doesn't look like it's actually paying any dividends at the moment. 20 cents, 39 cents. Does look like though, prior to that, when it was actually doing a little better, was actually paying a pretty decent dividend. So yeah, something to look at, guys. If it stays where it's at and it does try to rebounding, you guys get a dividend, you're buying this at a discount, a lot of room to grow. This is a good opportunity for you guys to get in this. So I'll stop this video. It's already getting longer than it should be. Appreciate you guys listening. Leave some comments down below what your thoughts are on it. If you guys are going to buy this, if you guys are going to pass, what your thoughts are. If you guys, any suggestions, leave that down below. Otherwise, if you got some value out of this, please hit that like button, subscribe, and we'll catch you on the next one. Thanks, guys.